Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. Once again, 419-794-3030. And the website is arhq.com. The Federal Reserve meets again this coming week to talk about interest rates, and Wall Street is betting a rate cut won't happen. Here's market analyst Pete Najarian on Fox Business.
So many people at the start of this year were predicting that there was going to be 6 or more rate cuts. I never agreed with that commentary, but it looks like we're going to probably, as we go through the year, if things kind of go through the way expected, we're probably going to see this year about 2 cuts, maybe, but the rest are going to be pauses. And I think this next one's going to be a pause as well.
Now, if he's right, then the Fed is carrying through on its pledge of higher interest rates for longer. If that is the case, if that is true, is it a bad time for people to invest in fixed income investments?
Well, first of all, what I wanted to say is thank you to a lot of our listeners that came out and joined us here just recently at our Economic Summit. So every 6 months we get up and kind of do a little of our State of the Union address, and I know we had a lot of our listeners come out and join us. So appreciate you being here. And if you were an attendee, you got to hear firsthand, kind of this exact topic that we talk about. And as we look at it here in March of 2024, what we have is we have the major market indexes, overall, be it the S&P, the Dow, the NASDAQ, at or near record level highs. Not all indexes are at record level highs, but you also have, even overseas, like in Japan, their index is near a 32 level high. So it might be easy for one person to say, hey, my fixed income investment isn't really performing as good as my stock portfolio, so I should get out of my fixed income investment and go over and add more to the stock portfolio. In fact, when I go to Yahoo Finances and I look at a comparison chart of, say, the S&P 500 index versus the aggregate bond index, in the last year, there's almost about a 30% difference between the stock market and the bond market index. And so one might believe to get into the market. The dangerous thing about that is you'd be selling low and buying high. And, we caution a little bit about the interest rate risk that bonds had before interest rates went up. But now that interest rates have come up a lot, and the Federal Reserve, although they're not lowering interest rates right now, if you look at it, there could be some real value into adding either bonds or fixed income back into part of a portfolio. And the reason why is because interest rates went up, the yield becomes much more attractive in some of the fixed income market space. If you look at the price valuation, where you have stocks at record level highs, what you have is you have a bond market that really hasn't recovered from the major drops that it took in 2022. So if you added money into the bond space, you're going to be able to purchase something that's not back to its all-time high. So again, when it comes to investing, you want to buy low, sell high, not chase winners and be the last one left at the party. If, bonds aren't your thing, then I would also say there's a lot of other fixed alternatives that you could look at from diversification, meaning that whether it's a money market account, the FDIC-insured bank CDs, even the rates that are offered by the fixed annuity companies, these are the types of rates that you want to be taking a look at and adding into your portfolio. My fear is if you take and you pull out of your fixed income investments and you put them into your stock market investments, you're going to get your risk level too high. And as we know, time and time again, at some point the market won't always be at record level highs. So the last thing you want to do is buy high, get beat up in the market, and then all of a sudden, be in a situation where your risk level is too high. If you want to know kind of what should be the right allocation for you based upon what your investment portfolio is, we have this software where we can help you develop what is called an investment policy statement. And I'm biased, but I absolutely love it. It's not ours. It's a third-party software. And so what we do is we go through asking you a series of questions like, do you like this investment better or this one or that one? So it's kind of like going to the eye doctor's test. And the goal is to get you 20/20 clarity with what your goals are with your investment portfolio and coming up with what your individual risk number is. And when we answer that series of questions, based upon how you answer them, it's typically going to tell you you're, let's say, a 35 level risk. That's what you're comfortable with. And again, we're going to measure risk anywhere from 0 to 100. And if your risk comes back at 35, the next thing that we're going to do is we're going to take your portfolio and we'll put your portfolio in there and we'll see what the risk number is with your current portfolio. I did this the other day for a couple that had come in, and it showed that they had a risk score of 75. Now, in this case, the husband felt comfortable being fairly aggressive, and the wife, I think, was fairly shocked when she looked at the amount of money that the portfolio could go down because it was all at risk. And now we're working on giving them some advice and feedback on how to kind of get the best of both worlds, meaning having a portion of the portfolio that gives the husband the growth potential that he's looking for, but provide the safety. And part of the ways to provide the safety is some of these fixed income investments that are out there, and it can help reduce the risk, because while the market is an all-time high, now is the time to understand what your risk is, and don't chase the hot investment. That could be a dangerous move to make in this environment right now. So if you want an independent portfolio analysis, you want to find out what is your risk level, and you want to know what your portfolio risk level is, give us a call. I'd be happy to get together and provide you your investment policy statement.
You know, it's easy to say that you're comfortable with risk when the markets are soaring along. People did that for, the better part of a decade from 2009 up until, right around 2019, 2020, saying that they were comfortable with risk because the markets seemed to do nothing but go up. We've had a reminder as of late that is not the case. And so it is a pretty good time, especially as Nolan pointed out there, with the markets being as high as they are right now, to really dial back and say, how comfortable am I with risk in actuality? You may find out that you are taking on more than you're comfortable with, but you don't know until you sit down and you have that risk analysis done. The team at America's Retirement Headquarters, one of the many things they can do for you. You just have to take that first step and reach out to them, 419-794-3030.